Let's look at the Swedish kroner against the Japanese yen. So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So the Swedish kroner is the base, 12.7% away from the 52-week low, 6.3% away from the 52-week highs. So let's just jump into the charts. So these are weekly data points and we can go pretty far back. We can see that we have had these bottom patterns before. Let me draw it in. Like back here, you had a bit of an inverse is head and shoulders pattern that played out pretty bullishly, meaning the Swedish kroner systematically strengthened against the Japanese yen. The pattern over here is somewhat similar to what we have now. Does that mean that we are going to see the exact same pattern? Obviously, it's not that simple, but the bulls have an opportunity here to do something very interesting. A key moving average is also in play, and that is this blue 100-week moving average. It's been tradable in the recent past for the bulls, but the bears are also pretty fond of that moving average. Been some fantastic shorting opportunities as well. But it means that it is a moving average that has a lot of legitimacy. We are approaching it now after forming that rounding bottom inverse head and shoulderish pattern. Here we have the daily data points, and another very important moving average is in play. Being great for the bears, nice to short, but the bulls have recently been able to use it as a place to buy. So the bulls are basically in control at this point. They do have a very interesting opportunity. Looking at these other indicators, did get a bit of a sell signal here on the MACD on the weeklies. Yeah, RSI is basically in very noisy territory. On the dailies, yeah, there's a lot of noise basically. So I write 200 daily moving average support here. I give the bulls a 5 on the technicals because there is a bit of a noise here. It's not like a squeaky clean bullish signal, but it is definitively more bullish than bearish. And long term, we also have some interesting setup here for the Swedish kroner. So let's look at seasonality. To the right here, we do get the clean seasonality for the Swedish kroner, Japanese yen. We usually see the Swedish kroner outperform leading into late September, but that is when we usually see its peak, and there's a protracted period of the Swedish kroner underperforming the Japanese yen. To the left, we get some other data. Here I am comparing the Swedish kroner against the US dollar against the Japanese yen against the US dollar pair. So below here we see when the SEK US dollar pair outperform or underperform the Japanese yen US dollar pair. Over the last 5 years, we do see that from August to November, Swedish kroner usually has a decent period. From August to September, there's a jump in strength, so September is a strong month. In the last 20 years, we do see that September is a pretty decent month. October, usually some give back, then November and December are very strong. So basically from September into December, it's a pretty good time for the Swedish kroner. I gave the bulls a 4 here on the seasonality. It's not super bullish, but it's definitively more bullish than bearish. When it comes to the fundamentals here, fundamental analysis when it comes to Forex is pretty tricky because there's so many factors, and there's major institutions in both countries that can just completely upend any kind of Forex analysis. So I think we rather should ask the question, which of these currencies have most bad news baked into them? I do think that there's a lot of, awareness about the issues in Europe related to the war. So there's a lot of pessimism that's simply baked into the Swedish kroner. When it comes to the Japanese yen, there's this whole thing about the tension between Taiwan and China. It's still just hypothetical. So I think that there's more risk of bad news when it comes to the neighbors of Japan than Sweden at this point. So I do think I will give this one bullishly, slightly here to Sweden, simply because I think there's a lot of risk in Asia. Let's look at relative performance. So yeah, against the S&P 500, we have 85% positive correlation, minus 11% here with the dollar index, 57% positive with gold, and 69% positive with silver. Looking short term, minus 39% with S&P 500, 61% with the dollar index, minus 32% with gold, and minus 45% with silver. So looking from short to long term correlations here, there were some pretty substantial differences. So I think the safe bet is to then just look at, the weekly data points, a long-term correlation. And we did get a pretty strong correlation here with the S&P 500, and it was positive. So what is good for the S&P 500 is usually good here for the Swedish Krona. So here is the S&P 500. We were peaking out above this blue 100-week moving average. Then as we approached this green 50-week moving average, the bears came back to short. They shorted very successfully back here in mid-April. And the bears are making money. They are smashing through the 100-week support. What could help the bulls, I think it's easier to see on the dailies. It is possible for the bulls to come back here and form an inverse head and shoulders pattern, but they need to buy quite assertively to do that. In this case, on the dailies, you have the blue 100-day moving average. The bears have, been shorting it. Bulls have tried to use it as support, but as you can see here, this was just a surgical, magnificent time to short that moving average. We are now below it. So we had a very ugly candlestick on Friday, just eviscerated a lot of gains. So these kinds of candlesticks where you just close below a support level that has worked out into multiple days, it's not good. It makes bulls freak out, and it makes bears get more ambitious, and that's a dangerous combo. Here are the weeklies. Let's look here at the dailies. Yeah, it's very messy. Clear sell signal here on the MACD. Yeah, there's just we have approached an RSI territory that did form lows here back in May and June of 2021. But you see that after that period, you see that we have to go down to the very low end of RSI to actually form a lows. So it's just a different RSI range in play at the moment. Here is the Swedish Krona Japanese yen against the S&P 500. Very, very obvious downtrend, lower highs and lower lows. Let's look a bit here at the seasonality, like that. Yeah, so yeah, in red here over the last 10 years, we usually see the Swedish Krona Japanese yen outperform the S&P 500 into late September. And blue over the last 7 years, similar, and green over the last 5 years. We do see that leading into September is actually a pretty good time to be in the Swedish Krona. So I give the bulls a 3 here on relative performance. We end up with a 3.5 in favor of the bulls. 200 daily moving average support is the key entry signal, a line in the sand. There's reasons to be bullish here, but Forex is hypersensitive to some major players. You have the central banks. You have a lot of geopolitical events also at the moment. So yeah, Forex is definitively something to keep your eye on very closely going forward. So we have some time left, so let's actually just run through some various charts. So let's just look at something like Netflix. We did see some lows forming about the last 2 weeks. The bears are back again. The blue 100-day moving average will be very important. We definitively want that to function as a support. The problem for the bulls is that they are just losing support levels. The 10-day moving average here in this pinkish color, the 20-day moving average in purple, now becoming clear resistance levels. So that's an issue. Here is Amazon with the weekly data points. Yeah, so the 200-week moving average in red, it's pretty close to us now. The expectation is that the bulls will try to use it, but obviously the bears, they definitively want us to close below it. So there is a battle between these two key players. Here are the daily data points. The red 200 daily moving average is just so easy for the bears to short. Clean shorting level here. Not squeaky clean back here in March, but worked out pretty well. So let's just measure. So those who shorted the 200 daily moving average here, they would, if they had like if they have a 3% stop level, then it wouldn't be stopped out, and they would have a max gain here of minus 39%, and that is a pretty good short. And if you get into the options market, then you can get much bigger scores. So here is Meta platforms. So we did form a double bottom. Let me just draw it in, double bottom, but we haven't yet seen a clear rally. We are sort of goofing around. The bears are fighting back a bit aggressively, and we are not yet seeing bulls just piling into Meta. The bulls still can pull this off, but so how many weeks has passed now without us having a major score? So yeah, 63 days now of just more or less going sideways. It's a bit dangerous. If you look at this previous double bottom back here, let me just draw it in, double bottom. So in this case, it took 1 to 2 weeks for us to get a clean rally. Now it's dangerous, very, very dangerous. Here we have the daily data points, and you can see that there are obviously bulls here defending the lows, but there's not bulls above those lows, just piling into the stock. So it's one of those situations where it really could go both ways. This doesn't inspire the bulls. It doesn't really make the bears very aggressive either, but the longer time we take now to go sideways, the more obvious it will be for the bears that there simply are only bulls protecting the lows. There are not bulls piling in to make new highs for Meta, and that is just a more bearish setup than a bullish one. Let's look at Tesla. Yeah, so Tesla, it's trying to get above this green 50-week moving average. It's been historically rather important, but we then lost it this week. On the daily data points, you have this red 200-day moving average. So you can see that here we do sort of goof around above, but then we essentially form a double bottom. So let me just draw in the double bottom in case you're not entirely sure what it is. So this, no, a double top. Okay, so double top, double top. So this is a double top, the opposite of a double bottom. So a double top is bearish, and when you have on top of that, you have the 200 daily moving average, which is a very important moving average becoming clear resistance, then it becomes easy for the bears to put on short trades because they know where to put on their stops. Here is Alphabet. So the blue 100-week moving average, historically it's been important, but currently it's being sliced and diced here, by bulls and bears, so it's just not very tradable at this point. Looking at the daily data points, yeah, I mean, the blue 100-day moving average, a blue 100 a day here is interesting, but also this one has been sliced and diced. So it matters, but it's a noisy moving average. So there's a lot of interesting setups now in the market. The big problem we have is that there's quite a few setups that are very much, a big move is going to happen, but we are not entirely sure in which direction. And those situations, they are very dangerous, very, very dangerous indeed, because they can very much trigger enormous volatility. So you could get a major move in one direction and then a major counter move. And those situations are where you can lose a lot of money very fast, because stop levels would just be eviscerated, and you get a lot of you can get a period of very noisy markets, and noisy markets, they can be very, very expensive.